Hi all, this is Dr. J, streaming live, broadcasting live from Long Island, New York, where the weather turned pretty nice. It was a nice, warm, sunny afternoon after an iffy start, a rainy start to the day. It kind of the reverse of some of the biotechs that I own, which started off great and ended up not quite as great. Well, we'll go through the list. I also want to talk about Apple, which I've been following lately. I've been following a trade that I proposed, and I want to see how that particular trade is doing. I know Apple was down today. Only two of the FANG stocks were up today. The NASDAQ was totally flat on the day. The S&P was down about 1/3 of 1%, and the Dow, I believe, was off 0.4%. So it was not the greatest of days, not a terrible day for the stock market. But for the biotechs, it was a little bit of a give me back day, at least for the ones that I own. So the IBB, I believe, was also down on the day. Of course, a little housekeeping, do your own due diligence. My opinions are my own. Please consult with an advisor if you don't do proper due diligence. Occasionally, Dr. J does have some good ideas. Follow me at your own risk. What else? Nothing much. Hope you have made money today, but let's get to the video charts. So I'll give a little commentary on each one of them, and maybe a little bit about the fundamental situation, especially regarding gern. I did tweet out earlier today, in the middle of my busy day, that you shouldn't be concerned about the ups and downs of gern, the stock price, until the continuation decision. Some days will be up within its trading range, and some will be down. Today was down. No big deal. Let's take a look. Okay, let's look first at Apple, if I can find it. There it is. All right, Apple gave back a little today, not too much. It gave back 0.8%. It actually traded very close to its upper trend line, which is one of the ways that I would consider exiting the trade if it touches that upper trend line, using a mental stop. Did not get there today. Some of you might have been smart enough to get out at around 223 plus. If you did, I tip my hats to you. But we're talking about a trade that got you in at the open 3 days ago on the 24th, on Monday. The open was under 217, 216.82. So you're still up about up almost $4 on this trade if you're in it, $3.60, something like that. So what to do? If I was in this trade, I would probably either look to sell it when the RSI crosses 70, and notice it didn't, or sell it when it hit with a visual stop, when the low of the day, or when the current price of the day crosses this trend line, the lower trend line. So if you're doing it that way, the worst you can do is sell for 218 tomorrow, which would still give you $1.20 profit. That's a conservative way to do it. You could make up a bunch of scenarios. You could use the 50-day moving average as a selling point, if you like, if it crosses that. There's so many ways to do it. You could also just decide to stay in it uh, with a goal of crossing the high of the day that was made, the high of the year that was made at 229.67. So if you want to play that game, looking for 230 or more, then I would have to set my lower limit, my stop loss at the moving average of 50 days. So depends how you want to play it. You're ahead now. Some people just don't want to squander a profit, and I don't blame you. So those are the choices as I see them. If you're in that trade, if you're not in that trade, and you want to go into a trade for Apple, I think it's okay. I think Apple is still in a nice little uptrend. I helped out today because I purchased an XS and an XS Max, both two phones today, one for me and one for her. Let's look at ATNM. ATNM. Remember I said double tops are tough to break through? Well, guess what happened today? It broke through the double top. It broke through by 2 pennies, hitting a high of 87 cents. So if it did it once, it could do it again. I like the action today. I don't like that it gave back as much as it did. It gave back on an announcement by the CEO after hours that they were going to broaden their pipeline by including a CAR T drug. A CAR T is a hot area of immunotherapy. I like the stock, but technically and fundamentally, I have to bone up a little bit, but I think the results of the data so far have been very good. So I'm expecting good data. I think A is considered to be out before B, even though B is further along in the clinical trials. So again, I have to. I would like to study this more carefully from a fundamental point of view, but nothing happened fundamentally today that was really negative. So from the fundamental point of view, I would say we're a slight positive, and from the technical point of view, even though we gave back so much of the day's gain, I like the fact that we broke through 85. So I would be a buyer here. I'm a buyer on any dips. And I think a dip to 74 cents, 75 cents could easily happen. So I'd be a buyer at 74, 75 cents. In fact, I'd even be a buyer at the levels that it's at now. That's just my opinion on this. Do your own due diligence. If you can follow me, but it's at your own risk. I actually added today near the close. I think I paid 77 and a half pennies. I got a bargain, maybe. All right, so let's take a look at adxs. Adxs is a stock that I've been accumulating. I did not add any today to my position, mainly because I've been very busy lately, really too busy to trade much. I squeezed in that one trade right near the close when I had a little bit of time. So what happened with adxs today? We gave back. No, we closed flat on the day. A tiny little doji, just below the upward trend line, the upper trend line, just below it. So am I happy about today? I'm not thrilled, but it gives me a chance to accumulate maybe at lower prices. So Dr. J isn't worried. I'm in accumulation mode. It doesn't have to make its move just yet as far as I'm concerned. So I would be a buyer here on any and all pullbacks up until 77 and a half pennies. Below that, I don't know. It's a question of how far you want to go with the stock. If you're believing in the fundamentals, as I do, you might be willing to risk getting cut by that falling knife. I'm going to risk it. I'm going to accumulate a substantial position, even if it goes below where I would like it to go technically. Okay, let's go on to, but that's just what I'm going to be doing. Probably not the right thing for most investors. Let's look at atxs, athxs. Dr. J has a sizable position here. And I know a lot of you on StockTwits have an even greater position than Dr. J, because I know what I have, and you've been advertising how many shares you have. So I'm not quite in some people's league in terms of number of shares. So what did we do today? We broke through, made another new high before falling back, and we almost freed ourselves of the upper trend line at $2.10. Unfortunately, it came back to trade below that 210 and close on the day at 212. After hours, I don't know what's happening, but we're down a nickel, probably on little volume. Although the volume today was quite good compared to previous days' volumes. So we had good volume today, relatively good volume. We had a new high. We had a higher high and a higher low. True, we had a red candle on the day, but I'm happy with the action on athxs. I would like to see it clear 210, not have any part of $2.10 mañana. So tomorrow I'm looking for a green candle, one that maybe opens at 212 and just moves up from there. That would be an excellent sign, a sign that perhaps Dr. J is going to add even more shares and be a greedy player. All right, CVM. CVM is one that I closed my small position in for a nice profit, but I don't want to leave those that are in it hanging. I want to take a look at the stock from a technical point of view. Well, I mean, this ascent was about 75-degree angle here. So, I mean, we know it's not going to continue at that, at least a 70-degree angle. So it looks like it's trying to follow a new, more modest trend line in the upward direction. If that happens, we should make a hit of this trend line at about, I don't know, at about 396, which would be a nice move from here. So that's what I'm hoping happens, that we move back to the 396 area and beyond. If it bounces off the 396 or wherever we make a touch of this upper trend line, only to come back down, then I would say it's not a great sign, because we'd be following this trend line going down, as opposed to following a new trend line going up. If I want to draw that line, let me take the liberty to draw that line. I'll come close to drawing a decent line. Sometimes it's not so easy. Let's see. That looks pretty good. So maybe it's looking to try to form a new trend line, a more modest one, with a much more modest slope and a slower ascent. That would make sense. Let's see what happens in the days ahead. On the negative end, if it goes below this line that I just drew and tests the lows at 303, then personally I would be a buyer at that point. Anywhere near 303, I would be a buyer. So even lower, even higher, I would probably be a buyer. Maybe I'd be a buyer right around here at the 350 level. Okay, would I buy it now? Probably not, but that's just me. There's still plenty of room for it to run, and data is due. So, I mean, there's a lot of reasons to own it. There's a lot of reasons to add to your position. But I have other plays that I'm more interested in right now. So if it dips back to that 350 area, I might be a player again. All right, Geron. Didn't we do Geron? Oh, I don't know if we did it. I don't think we did. Down 15 cents. Are we going to cry about this? Definitely not. It's in the middle of its channel. It looks like a typical trading day for a stock that's in wait, waiting for the Robert E. Lee, waiting for the Johnson & Johnson decision, the Johnson decision to go ahead on the trials, or maybe the J&J decision to buy out the company. Whatever we're in a wait state, we could trade anywhere between 7-Eleven and 575 tomorrow. I wouldn't be shocked. So any of those numbers, and it doesn't mean anything either, because nobody knows what the decision is, except a few insiders that are very tight-lipped because they don't want to go to jail. I don't blame them. Okay, so that takes care of Geron. Nothing new on Geron. Nothing to write home about. You can't make a bear case or a bull case from the price action today. The chart doesn't tell us anything more than it did yesterday or the day before that. So Geron is in a wait state. If you want to play it up to the $7 level because you think we'll rally before news, be my guest. If you want to short it down to the 575 level, that's risky money. You want to do it, it's your money, go ahead. ANKS. Oncosec Medical made a very nice bounce off of the 133 lows, and is flirting with breaking out of this lower trend line that it's been following for a while. So if we make a clean break of this lower trend line and hit the upper trend line over here, let's say in sometime next week at around $1.70, that would be a phenomenal sign for ANKS, and I would portend bigger and better things and move up along that trend line, heading towards that 2.25 mark by the end of November. So that could easily happen. I mean, it's got a lot of Momo. I like the way it held at $1.33 and came roaring back. So there's a lot of action in ANKS. There's a lot of anticipation in ANKS. As I said, the new CEO of Oncosec Medical, Daniel O'Connor, is a very sharp fellow. The Pisces trial with Merck, it's a collaboration. I think that it's being funded mainly by Oncosec. So they're gambling with their own money that this will prove to be a very useful drug for Merck. And I think they're right. So I'm expecting really good results from the Pisces trial and from other trials on melanoma that Oncosec Medical is involved in. The stock reflects the expectation of good news ahead. I'm going to introduce one new biotech, one that I've owned for a long time, Cytokinetics. And it's Cytokinetics Incorporated, CYTK. The only reason I'm showing this one now, it trades on very little volume. It's not a tremendous mover, and it's not one that day traders would be interested in, thank goodness. But I'm interested in it because, one, I have a nice position in it, and two, it looks like it's getting ready to break out. So a break of these highs at around 10 $10, if it can get up there and break the $10 level, I'd be very bullish on Cytokinetics. It has a collaboration, I believe, with Amgen, or more of a partnership with Amgen on a drug for heart failure. So it's a muscle drug. It acts on muscle, and the heart, of course, is a muscle. I'm not sure about the mechanism of action, but I know that they're involved in other things besides cardiac applications and indications. They have other drugs that they're in the pipeline for progressive neurological diseases that cause things like tremors and so forth. Okay, so that would be Cytokinetics. I do like Cytokinetics right here after it made a beautiful run from the lows of August, where it was at $6.21. It's come up more than 50% to $9.30, and technically it looks pretty darn good here. So I'm not adding to my position because I'm adding to other stocks like adxs and actinium. I might be adding as well to athxs. I might add a little to ANCS, and I might come back into CVM. So Cytokinetics, even though it looks very nice and I'm very excited about it, I think I have better places to add right now. But this is one to keep an eye on, and not to be a day trader for this one. Low volume. If you notice, practically the volume bar hardly moves up at all some days. It's almost invisible. So, and the other thing is we're heading to overbought territory with the RSI at about 70. So we have to be selective as to which good stocks we put money in. And I'm just choosing not to add to this one. Again, if you don't own it, it might not be bad to try to get to go into this one at least a little bit on a pullback. So that's my overview of biotech. I like the IBB. I'm very bullish on the IBB. I'm very bullish on the FANG, in particular Apple and Amazon. I'm very bullish on the baby biotechs, like the ones I've been following. I think that we're going to have Macy's firework display over the next 4 months that will feature small cap stocks, including biotechs. So I think we're going to get big runs on some of these biotechs, and I want to be in them. So actually, stocks that look risky, like Cytokinetics, like Actinium and adxs, just by the basis of their market cap and their stock price. I'm not saying they're not risky, but they potentially could be part of the fireworks display. So that's why I'm in them. I'm in it to win it. As they say in the New York State Lottery, you got to be in it to win it. So I guess I said enough for today. I know that there's a lot of nervousness around Geron and the Johnson & Johnson buyout decision or continuation decision. I'm going to be very satisfied, I'm sure, with either buyout or continuation decision. I do have a plan just in case it doesn't go my way, it doesn't go our way as longs, and the stock price collapses due to J&J saying bye. So I do have a plan. I want you all to have a plan. You can see my video blog on that topic, which was a few days ago. And if you don't have a plan, think about what you want to do just in case. Hold, add, sell, etc. Well, what other choices are there? This has been Dr. J signing off from Eastern Long Island, New York, saying sayonara, saying shalom, saying goodbye, saying ciao. See you all tomorrow or mañana.